Good morning traders, welcome to this live currency strength indicator table video with me John on this Monday the 6th of November. So some updates to the tables today. We can see obviously the US dollar coming in here as a weak currency. That kind of developed over in sort of Friday after that NFP reports kind of suggesting that the Fed don't need to move interest rates, that they can keep them at a steady level. So yeah, US dollars come in as a weak currency at the moment, so there's potential for a little bit of a turn here. Aussie is a strong currency, pound also a strong currency. We quite liked the potential for the pound going into last week. I actually looked at a potential pound yen long, which we didn't enter in the end, which is slightly regrettable now considering it's about 200 pips up from where we actually discussed that potential move coming into the market. However, we did put a bit of a call out on this last week. So if you did actually manage to come over to the post that we did on the actual 1st of November, we actually did discuss a potential pound yen long opportunity. You can see interest pending order and open position, sort of open interest live position. And what we discussed here was setting an alert at 183 spot 83, and it came after the daily sort of rally here that we saw. This candlestick formed, and then we were looking to see if we could get a break above 183 spot 83, which at the time was sort of above this moving average here. I think what we were looking at was the fact that price was coming down into this area, and we were looking for a break above the moving average at that time. Price then obviously since did decline to the downside, and we did cover it in further videos of potentially going long a little bit in here rather than up towards that 183 spot 90. Just bringing your attention to this though, so if you did take this order and you went live at 183 spot 90 with a buy stop order with 100 pip stop targeting 240 pips, this is what your position would be looking at right now. Like I said, I didn't take that position because I was looking to get in a little bit lower. So for me personally, I didn't get involved with this, but this is something that you could have taken. You'd be around about 170 pips to the good with 100 pip stop loss. So that's about a 1.7R at the moment, looking to target 240 pips, which is 2.4R. So if you're in this position, then I think this is great. You can hold this. You can even bring stops to break even now. I've set an alert back down here at 184 spot 50 near this sort of hourly low, or down through here, but just go up to the hourly chart, sorry. It's this kind of hourly low in there. I'm looking for a pullback basically to get into this move. If we look at the daily chart, nothing's really changed in terms of our analysis here. We identified previously that we breached this trend line resistance. We also breached this high of 183 spot 70, and what we really wanted to see was price kind of hold towards this area and then breach this kind of high that we've had, and that's exactly what we've had over sort of Friday and today so far. Obviously zooming up to the upside at the moment, potentially going to reach our day's ATR today. Maybe something that we look at going into tomorrow on a bit of a pullback continuation move. Targets for this are the 186 spot 50 area. Those are those highs that formed back in August of 2023. So I like the idea of price reaching that level. It's a shame that I didn't jump on that move, to be honest. I was looking to get involved with it. It's just that we had a couple of exposures at that point already. So I didn't want to allocate too much risk onto this. I think as well at the time we had a Bank of England announcement coming up that last week, so I didn't want to jump too much into pound. So yeah, I didn't want to jump too much into that currency, and obviously I've been left out a little bit here. But if you didn't mind that, then you would have got involved obviously towards that 183 spot 90 level, and that would be your current position in the market. So I'm looking to see if we get a pullback. Obviously it'd be nice to see a pullback into the previous swing high, that 184 spot 30. Whether we get that now is going to be something different. I'm going to be watching this dynamic support and resistance in terms of this moving average. Like I said, what's been working really well for us lately is seeing price come within the averages and then break back above it. Like I said, should have been long in here really. Stop losses below this low and would have benefited from that move obviously through there. But price could do the same again if we get a bit of a pullback here. That's why I'm kind of identifying 184 spot 50 into those lows, into this dynamic support and resistance. break back above the 50 MA, we might get a last sort of opportunity to jump into and move to the upside there. So definitely pound yen is one to keep our eyes on going into this week. I like the idea of a pullback continuation. There is some data coming up for the UK this week. If we just go over to our live tables here, we do have construction PMI coming up in about 7 minutes, but later this week as well we have some GDP data coming out of the UK. If I just scroll down here, I think it was on Friday. Here we go. I thought it was on Thursday, but it's on Friday, that GDP data through there. So lots of data towards the end of the week, which shouldn't really be a problem if we're going to try and get long into this market this week. But just to let you know that that was something that we looked at. Obviously, we're currently in a trade as well. We are in a Euro Swiss long. So I have managed that position right now. I've bought our stop losses to break even. The reason why I've done that is because what we should expect from a market is for the daily chart to continue to make higher highs and higher lows like it has been doing for this candle, for instance. These ones in here, higher highs and higher lows on the candles on the daily chart. We had an early sort of warning sign. The early warning sign, first of all, really, if we go look at the tables, we can see that Euros, yes, is still on the tables, but only from a trend trading perspective. Doesn't have any confluence over here with the day traders table. The Swiss franc has moved from W1 down to W3 and doesn't hold any confluence on the trend traders anymore. So that's the reason why I'm starting to consider just kind of managing that position rather than trying to add to it, or rather than trying to sort of stick with open risk there, because if the Swiss franc removes itself from the tables, then we have no confluences really anymore, and there's potential for that market to reverse lower. Obviously, I don't really want to give back too much profit either. We've been doing fairly well recently, so I don't really want to give back any sort of losses here. So yeah, moving stops to break even, I think is just a sensible idea. I looked at the 30-minute time frame basically, which is kind of where we actually got into the trade last time. It was the hourly, sorry. We kind of got in on this break of above the 50 MA here, just through there. And we were expecting price to try and make new highs. We are still above the 50 MA on an hourly right now, but I think if we were to breach to the downside of this, then the next logical area for price to go is these swing lows in here. Whether we find support there is a different question. So if we did, let's say price came in and then price closed back above the 50 MA, and then the table showed us that Euro Swiss was one to buy, we could just buy back in, okay? We haven't lost anything. We haven't gained anything either, but we haven't lost anything more importantly. So we can just look to jump back in. Very similar to what happened actually to EuroCAD. Left a little bit on the table here last time. We got long in here. We wanted to see price come higher, potentially up into these swing highs, and what we were actually looking for at that point was a little rally higher. Just to kind of show you what happened here, if I just zoom out, this was the sort of sideways price action we were getting, and at the time EuroCAD went onto the same side of the tables. That usually is a bit of a hard exit for us, so we exited for just below break even there, and then price did actually go to where we expected it to go to, and you can see the averages actually stayed fairly sort of bullish there. So I'm kind of learning my lesson from EuroCAD at the moment. I don't want us to just get out of it to get out of it for the sake of it. I want us to have good reasoning to leave this trade. And at the moment, we're still sort of showing signs that we're above the 50 MA. Obviously, if we close below it, I think we're probably going to come back lower. And like I said, I've explained already, there's potential to potentially get back in if it was to set up again. So I think stops at break even is a smart move there, and we can obviously open our risk up to other opportunities like pound yen, for instance. Other markets on the move as well. Aussie yen, sorry, I've gone on to Kiwi then, yeah. Aussie yen started that sort of bullish move to the upside. We've tried to catch this one a couple of times. I've been basically, again, eyeing up this 50 MA, looking for a bounce. You can see that this market is moving aggressively, so we're not really getting a pullback to that. So I've been on the 30-minute time frame, trying to identify a move as well, and we had these kind of moves in here, but at the time Aussie yen wasn't necessarily on the tables, so we are now at daily resistance. So I don't really want to jump into anything here. I think Aussie yen you need to leave alone a little bit, because we are at these key resistance highs at 97 spot 50. Let's flick back to the tables. Let's see if there's another chart of interest. Obviously pound yen we've talked about, pound dollars on the tables. Still got lots of dollar data coming up this week as well. You've got Aussie US dollar that you can look at. So let's go take a look at those markets. So let's jump on Aussie US dollar first. Now, I've had a little look, obviously, ahead of time. I was just looking to see where price was at, and you can see we're pretty much smack bang at this 0 spot 65 handle. We're trading at 0 spot 65.10 at the moment, but if I was just to put a little price label on here, you can see that it's 0 spot 65. Now this is obviously a very important level for price, especially over the course of this sort of second half of the year. We can see that price has reacted in and around these areas most recently, and now we're in that point. A close within that zone, I would say, is actually a very strong indication that price could move to the upside, because what it's showing us is that buyers are willing to kind of hold price in there, whereas when it's been there in the past, you can see that sellers have reacted from that point, and we've had sharp sort of rejections to the downside, whereas this time we've actually held there. So I actually think that, you know, Aussie could continue to push higher. Looking at it from a weekly perspective, where could price go to? I actually quite like price potentially coming up into these highs in here. Let's just grab a price label and we can mark this up together. So around about 68.65. I'm going to just go a little bit higher than that. I want to go 68.75 and see where that kind of brings us. Yeah, just within that sort of zone. I actually quite like the idea of price, if it were to kind of breach 0 spot 65, continuing its way to the upside, 68.75 could be a good point of call. The only problem I've got right now is we're so far away from the averages. You know, I really like to use these averages as like dynamic support and resistance. I like to use them as, you know, in trending conditions, especially. You can see if I go back to sort of the last trending condition we had on the Australian dollar versus the US dollar, you can see we come into the averages, we leave the average, price extends. We come into the averages, we leave, price extends to the downside. We come in, we leave the averages, price extends to the downside. So that's what we're trying to do here. When we've got momentum behind us, we're using that sort of averages here as those kind of potential momentum points for the market. And at the moment, we're really far away from the averages right now. The next sort of average is down here towards 64.50, which would be this sort of swing high in here on this hourly chart. So previous swing highs around about that 64.50 area, 64.56 would be a possible area to look for our long ideas. But I think the best one, to be honest, is pound at the moment. I'm actually watching pound US dollar as well. If we look at it from a weekly point of view, price has breached the trend line support, trend line resistance that has held and formed from the highs back in July of 2023. We've now breached that, we're above that. So it's about looking for those next levels of support and resistance. Obviously, it'd be nice to see price up at 131.25, because that gives us about, you know, 700 pips to work with. But the reality of getting it up there is a little bit different. But looking at the daily chart, you can see that we've breached this sort of consolidation now. We're holding above that. So it's just about identifying those next levels of support and resistance. Now, I can clearly see there's something going on around about 125.75, which is kind of this low in here. And what I'm really looking at is sort of this zone going through there. I can see that price has come in, found support, breached it, found resistance and continued lower. So something obviously happened within here where buyers were happy to step in, where sellers were happy to step in. So I like the idea of potentially coming up towards this zone. So the next sort of zone of interest for us from a daily chart perspective is up at 125.50 or 125.40. Let's see where 50 puts us. Might be the upper end of that level in there. So I like the idea of price coming to there. So the next thing is, how do we get to that point? You know, we need to see the price sort of ebb and flow towards that level. Current moving averages on the hourly chart are resting at 122.75, so that's quite a big drop to get us to that point. So I've set an alert at 123. 20, 123.25, which is this previous daily high in there. I'd like to see a pullback. I would like to see a pullback into that zone. Maybe the averages can catch up on an hourly time frame then, and then that can be our long idea. So I think for now, what I'm looking at is obviously we've got open Euro Swiss. We've moved our stops to break even. Hopefully we can find some support here. If not, we'll be knocked out for break even. But if it does find support, then we're still looking to target the highs there at 96.80. I really like pound longs at the moment. Pound US dollar has breached a key level of daily support, but really I like pound yen the most. I think this one really clean price action. 186.50 could be one to watch. One other just honorary mention is Kiwi Swiss. Like I said last week's. We were looking at Kiwi Swiss longs, very strong bullish weekly close now. Look how clean this price action has been over the recent times. I like the idea of price coming up to 5,500, which is these previous weekly highs back in September. These highs could be something that price wants to come and target. I wouldn't mind seeing a pullback, so I'm just watching the daily chart here. Again, this is obviously going to affect our Swiss franc performance in Euro Swiss, I believe, because I think if we saw the likes of Kiwi Swiss coming down like this, then the likelihood of Euro Swiss staying in is very, very, very low. But if we can get some kind of shallow pullback here, we could look for another long opportunity. And Kiwi at the moment, although there's no confluence on our tables for Kiwi, it is actually the strongest from a day trading perspective. So really, you could even look at Kiwi dollar actually for an opportunity. Now, I have set an alert on Kiwi dollar at 59.60, which were these hourly lows. I haven't done much analysis on this, to be honest. All I can see is that this is obviously a big weekly area of resistance, and price is currently at it. So you know what my feelings are when we come into areas of resistance. I would rather not sort of be trading from that point. We tried to get short recently. That didn't work out for us. We tried to get short below this 50 MA in here. We had a good 50 pip extension to the downside, but we just happened to catch the low of the trend there, and unfortunately for us, we got stopped at break even. But it was a good idea to get out of that position in the end, because price has since moved sideways and obviously breached the upside. But a little bit of patience here. We're in that weekly level. I expect a pullback of some sorts. If we were to get that pullback, then there's potential for us. But for now, I'm happy just to watch the daily closes, see how they perform. Same with Kiwi Yen. Kiwi Yen's a little bit different. It's come up into resistance already, whereas pound, you can see there's still some way to go before that resistance. So pound yen for me is the one to watch going into this week. Once more, pound US dollar as well, and we'll see how Euro Swiss can perform, whether it stays in or not. Thanks for watching this video update. I hope you enjoyed it, and I'll catch you in the next one.